Imagine two identical lives that diverge into a $250,000 gap, and the difference is a three-digit number. This video will show you exactly how a tiny credit score delta can steal $250,000 from one twin over 30 years. You won't believe how mechanical and rigged it is until you hear the math. Meet Jason and Luke. Same age, same neighborhood, same $75,000 salary, same model gray sedan, and identical houses side by side. On paper, they're twins. On the ledger, they won't be after 3 decades. By age 60, Jason will have paid about $250,000 more than Luke, not to gambling or bad choices, but to interest, fees, higher insurance, and rent, because one score sits at 640 and the other at 760. That three-digit figure is not morality or talent, it's a profitability rating to banks, how much money you're worth to lenders, in other words, your price tag. Surprise! The credit scoring system we worship is a corporate invention from 1989. It's younger than Taylor Swift. It standardized lending for securitization and created a modern caste system. Want a $400,000 house? With a top score, 760 plus, you might qualify for 6% interest. With a 620 score, considered fair, the bank tacks on a risk premium, maybe plus 1.5% to 7.5%. That 1.5% spread doesn't stay small. On a 30-year mortgage, it converts into around $120,000 in extra interest. Same house, same roof, you just paid one neighbor 6 figures more. If you'd invested that extra $120,000 instead, over 30 years it could compound into roughly $500,000. The score isn't just an expense, it destroys your retirement potential. Credit scores are used to price auto insurance, require security deposits, and even show up on background checks. Lower score equals higher insurance, bigger deposits, fewer job offers in some sectors. Data shows a safe driver with bad credit can pay more than a reckless driver with great credit. The system values debt behavior over actual behavior. It doesn't measure cash in the mattress. You can have millions in hand and be unscorable. Conversely, you can be broke yet build a high score by borrowing and repaying constantly. The algorithm likes participation in debt. It rewards those who borrow and pay interest. Pay off a loan early? Sometimes your score drops because the system liked the interest stream. Subscribe if you want this fixed for your family. If you care about keeping $250,000 out of bankers' pockets, hit subscribe now. I'll walk you through the exact hacks to fight back. Breakdown: 35% payment history. On time is golden. 30% credit utilization, how much of available credit you use. 15% length of history, and the rest split among types of credit and new inquiries. A single 30-day late payment can scar you for 7 years. That binary on-time late slice dominates the score. Autopay is non-optional if you value a top rating. Using $500 of a $1,000 limit is 50% utilization. Bad. The same $500 on a $10,000 limit is 5%. Good. You didn't erase debt. You changed the denominator and fooled the algorithm. Rich families inherit good credit. Adding a teen as an authorized user can gift them decades of pristine history. One click, one lifetime of leverage. That's structural advantage, and it compounds. Credit bureaus must verify data under consumer protection law. If a record can't be verified within 30 days, it must be deleted. This legal quirk is how many people remove bogus negatives, and it's a tool you must know. Ideals are noble. If you can live outside credit, do it. For virtually everyone else, skipping the system is playing life on hard mode. The pragmatic move is to treat the score as a tool you should master, not worship. Automate payments. 35% is on-time history. Ask for credit limit increases to lower utilization. Never close your oldest card. Age of accounts matters. Tiny actions, huge long-term gains. Request limit raises every 6 months. Keep a dusty old card active with one annual small purchase. Use dispute rights to challenge errors. About 1 in 5 reports contain mistakes. You're not chasing a number because banks demand it. You're protecting your future compounding. Every late fee, every premium, every deposit is a drag on wealth accumulation. Stop treating the score as identity. Treat it as a game you must beat. Targets, automation, system-level thinking. The wealthy don't have better luck, they optimize systems. Authorized user hacks, invisible fees, higher insurance, all funnel money upward. The system legalizes transfer of wealth from organized poor to well-organized banks. Protect on-time payments, minimize utilization, maintain long history, use dispute rights, and accept the pragmatic truth. Mastering credit keeps $250,000 in your pocket, not the bank's. If this opened your eyes, do the simplest thing. Share this video with someone who needs it. Subscribe to Mike Invest for the exact step-by-step playbook, and start automating your bills tonight. Dominate the score, reclaim your compound interest, and stop paying the invisible tax. I'll see you in the next one.